Canada, the land of Tim Hortons and Cobra chickens, is inching closer to a major housing market crash. While practically every economy in the world took a nap during the pandemic, Canada decided to turn things up and saw one of the quickest growth in their housing markets ever. House prices in cities like Vancouver and Toronto skyrocketed in a couple of years, with an average house in Toronto now costing over $1 million. But the Canadian housing market today is a totally different story than a couple of years ago. It has turned from people making millions by selling their homes to now families struggling to keep up with their mortgage payments. See, just before the pandemic, Canada already had a relatively low interest rate for a decade at just under 4%. But as soon as the country was hit with restrictions in 2020, the Bank of Canada decided to lower the rates again in order to counter this free fall of the economy. The rates became so low that the debt basically felt like free money. So the average Canadian who was trapped in their house felt like there couldn't be a better time to upgrade this place. They did that by borrowing to their eyeballs because the rates will never increase and this pandemic will never end, right? Well, fast forward a couple of years and now everything is back to normal. You can travel and eat out as much as you want, but one thing was not the same anymore: inflation. See, every country tried to save face by giving its people some money. This led to trillions of dollars being printed during the pandemic. This flood of new money in the market, along with other factors, has resulted in the inflation we are seeing today. The same inflation which is affecting every household budget in Canada. So here comes in Bank of Canada again trying to save the day, and they decided to start increasing the rates this time. This was their way of telling people to calm down and take things easy in the hopes of that it will slow down the inflation. But for some reason they forgot that the rate increases affects all the debt Canada has, not just new debt, all debt ever. See, a major difference in the housing market in Canada and of the United States is the way their mortgages work. A very popular option to finance your house in the States is a 30-year fixed mortgage. This guarantees that your rate and payment will not increase for those 30 years. On the other side, Canadians can also take a 30-year loan, but the rates can only be fixed from 6 months to 10 years at a time, with the most popular option being a 5-year rate. Either fix a rate for 5 years or you can take the gamble and go variable. The gamble of variable rate was very attractive to a lot of us as it was by far the lowest rate in the market. So a lot of Canadians saw no light at the end of this COVID tunnel and took those bets. But regardless of what rate anyone took, one thing was guaranteed. As soon as the 5 years are done, people need to renew their mortgages. Renewal forces people to pay their loans at the rate going on after those 5 years. And in March 2022, their nightmare begins. Since then, the Bank of Canada has kept on increasing the rates again and again. They have increased the rates from 2.45% to now 7.2% in less than 2 years. So the Canadians across the country are seeing their mortgage payments increased by thousands of dollars every year. With already tight budgets, never increasing income, and extra taxes on things like gas and utilities, these increase in the mortgage payments is about to become the last straw that breaks the Canadian economy. As per an economist at Manulife, if we take out the mortgage rate costs, the actual inflation is closer to 2.5%. Now that seems a lot more manageable because Canada has been around that 2.5 mark for a long time before the pandemic. And sure, these changes in rates and inflation led to the housing market slowing down a little bit, but not as much as it should. For a long time, foreign investment was blamed for inflating the prices. But in early 2023, a new law banned non-Canadians from buying houses. Did that fix the problem? Absolutely not. Then the focus shifted towards immigration. Canada accepts more than 1% of its population every year as new immigrants. And even though the country has the world's second biggest landmass, they are unable to house these people who are coming here for a better life. Canada is big, but it's not the best place for building houses. Majority of the country is covered in large wastelands where temperatures easily drop below -30. Means building houses is a lot harder in areas away from these major cities, areas that lack the basic infrastructure, which leads to growth in select few cities with limited land and increasing prices. This leaves a massive gap in supply of the much needed affordable housing. And this gap is the reason these home prices aren't coming down. A combination of never reducing prices along with a huge number of mortgages which are coming up for renewal are pushing more and more people closer to default. People starting to default can lead to a chain reaction which tanks the Canadian financial market. Some say all this is a result of bad decisions made by the Bank of Canada, others blame just one person. But the fact of the matter is that unless something is done soon, this crash is unavoidable and could be a lot worse than 2008. Let me know what do you think of this crazy housing market in Canada. If you enjoyed the video, please like and subscribe. Thanks for watching.